Welcome traders to another Tickmill trading update with me, Patrick Munnelly. Want to update the S&P 500 view using the emini futures contract and put together a trade plan for the trading week ahead, looking at some high probability action areas and some price targets this week. So before we jump into the technical picture and the charts and levels, etc., let's review where we are from a market performance, narrative, dynamic, and internals perspectives. So, looking at last week, from the Tuesday open to the Friday close, the early weakness that we saw in the markets was bid up throughout the week, and we are now back into a multi-week balance area. Not much change in terms of the bull bear performance in terms of sectors. We saw a slight improvement to the sector weighted bull bear posture. Financials flipped to bearish and finished the week bearish, noteworthy. Communications services started the week in bearish posture and finished the week in a bullish posture. Likewise, healthcare started the week in a bearish posture and ended the week in a bullish posture. Information technology began the week as in a neutral area and finished the week as neutral also. With 25% of the weights in the XLK reporting this week, maybe we will see some movement out of that multi-week balance that we've seen in terms of the infotech sector. Currently, everything including price is hugging the 145 level. Given the 34% weight of the XLK in the S&P 500, we could see a rotation lower in terms of the index level if that sector weighting sees any negative impact this week with the earnings to follow. So plenty of energy being built up, and with about a 5 to 6% balance range, a successful break of that balance in the XLK could produce a significant move in terms of the index, the S&P 500. So in terms of the calendar for the week ahead, we get durable goods data today, ADP employment data tomorrow, then Wednesday, really the highlight, Wednesday and Thursday really, but Wednesday we get the FOMC meeting, and we get, after the close in New York, earnings from Microsoft, Meta, and Tesla, so we can expect some volatility around that event. And then heading into Thursday, we get trade balance, initial jobless claims, and we will hear from Apple and SanDisk after the close on Thursday. And then rounding out the week, we get PPI data on Friday. So from a data perspective and potential volatility, certainly we will be looking to the middle part of the week with respect to catalysts from that perspective. So the market narrative and dynamic heading into the week is obviously we're going to hear more from Trump with respect to tariffs, imposing a potential 100% tariffs on Canada, any additional developments with respect to Greenland that's still lingering in the background. We also have the Mideast scenario with Iran. And certainly, there seems to be quite a decent U.S. military buildup in that area, in that region, and so that could portend some potential action there. And then, obviously, with respect to the main dynamic coming at a market level this week, it's going to come from this mega cap tech earnings deluge heading into Wednesday, Thursday. In all likelihood, the Fed are going to be on hold, and given Powell's current situation with respect to leaving the Fed this year, it's unlikely that we're going to see any major fireworks into Wednesday's meeting, but certainly want to be on watch in and around the release and for press conference. Further updates to follow on that as we get into the week. But in terms of the internals for the market, what do we have? Stocks trading over their 20-day moving average, currently 57% down from that elevated 66. Stocks trading over their 50-day, 66 down from an elevated 71, and the 200-day, 66 down from the 67 last week. So no major change in overall breadth. It's positive, and the market continues to act in a fairly rotational fashion at this stage. And with respect to the gamma in terms of optionality, 69.72 is going to be the flip zone. Above it, the market can benefit from positive gamma with reduced volatility and likely grinding price action higher. Below it, as we've seen this morning in this morning's action, the negative gamma results in somewhat erratic price action. So it's going to be really for the bulls to reclaim the gamma flip zone to see a push higher this week. That will be the initial hurdle for the market. So that said, let's take a look at where we are from a technical perspective and identify our levels for the week ahead. So the daily volume weighted average price has now flipped bullish and sits the daily five look back VWAP sits at 58.96. Weekly is bearish as of last week's close. That is nullified on a weekly close above 69.61, and the monthly remains bullish above 68.56. In terms of the market structure, on a daily time frame, we're in a balance 2-day balance now, 69.25 on the downside, 69.69 on the upside to either send us into one time framing down or one time framing higher into the week. So weekly structure is one time framing lower versus 69.69. So we'll need to see that 69.69 and the 69.61 area recaptured by the bulls to flip the VWAP bullish and to shift the weekly structure. Monthly structure is still one time framing higher versus 67.75. So heading into the week, given the the weekly setup, we need to see this 61 VWAP reclaimed to inject further momentum to the upside. In terms of the weekly, notice the divergence on the momentum study is still active. In terms of the daily, let me just blow this chart up and so you can reacquaint yourselves to what we're looking for here. On the daily versus the tariff tantrum lows, we have a structure, a wave structure, 1-2, potential 3-4 low at 65.22. Still keeps us on track to test the 7,200 level. 7,220 is a 5 equals 1 minimum upside objective, and the 161 extension of our wave 4 low back into that 65.22 comes in at 72.17. So that's our confluent target zone on the upside. And ideally, what we'll be looking to do is achieve that now into the February options expiration period. From there, we could see a little bit of weakness creep into these markets, is my sense at this stage, given the current setup. In terms of the daily, we did trade lower overnight, gap down. Obviously, concerns about intervention risk in the dollar and the yen led to some risk aversion initially. But as we've seen on these weekly gap downs, bids emerge pretty quickly in the market, and we are trading higher again now. Trading just down on the day, 0.07%, just 5 points down from the open. So the setup, as I say, remains constructive at this stage. So let's move and take a look at where we are in terms of the intraday charts, the hourly time frame. So we gapped last night into the weekly bull bear zone 68.80 to 68.70, and like I say, demand became evident pretty quickly there. So a nice long tail on the rejection. Certainly, any test back below there or any sweep of those lows that again sees a quick rejection, I would be looking at an opportunity to engage on the long side. As we head into the early part of the week, as noted just now, what we're looking to do really is reclaim this 69.60, 69.72, 69.72 from an options perspective is the gamma flip zone that I talked about. So if we can get back above there, then for the early part of the week, we're going to target a move up into the 69 90s, 7,000 level. And then as this prior resistance in this 69.60, 69.70 potentially acts as support, we're going to look to grind higher to take us up into the weekly expected range resistance, which comes in just below all-time prior lows at 70.29. That's going to be the primary upside objective for this potential push higher. But as I note, we are in balance at the moment, so we're going to see how we resolve through this current trendline resistance. There is noteworthy here, whilst we do maintain resistance versus this current swing structure, so the 6960s hold, we do have a downside equality objective, which could see us trading down to 67.45. To set or to get involved in that trade, what we really be looking for is a break below the weekly bull bear zone to encourage a test of the weekly downside expected move, which comes in at 68.28, just above last week's 68.14. From there, what we then look for is a retest of the bull bear zone from below that attracts fresh selling, and that would take us down to test into that a quality objective at the 69.46 area, where once again I would be looking at the potential to trade from the long side. So as we head into today's session, we're going to be looking for bulls to maintain support into that 69.22 to take out the trend channel resistance and reclaim the 69.60s, 69.70s. Then on to test daily projected range resistance today, comes in just below the 7,000 level. And as we find support at prior resistance, we look for an advance into the weekly expected move. Further updates to follow on a daily basis, but for now, that's the lay of the land. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.